Hello everyone, I am Dr. Radvi and today we will be exploring the various types of banks in India. The Indian banking sector is diverse with each type of bank serving specific roles within the financial system. This presentation will provide insights into different categories of banks and their unique contributions to the Indian economy. The Indian financial system is fundamental to national economic growth. It consists of various financial institutions, including banks and non banking financial companies. Banks, in particular, play a vital role as the ones for mobilizing deposits and disbursing credit, supporting various sectors, and fostering economic development. In this session, we will examine the range of banks that serve everything from rural agricultural loans to complex corporate financing. The very first bank is Reserve Bank of India, which is the central bank. It was established in 1935 under the Reserve Bank of India Act of 1934. The RBI regulates the financial system, oversees monetary policy, issues currency, manages foreign exchange, and supervises other financial institutions. It also acts as the banker to the government and other banks, playing a pivotal role in debt management and promoting financial inclusion. Moving ahead, we have commercial banks. Commercial banks are governed by the Banking Regulation Act of 1949. They are central to the India's economy. They accept deposits, provide loans, and offer various financial products catering to both retail and corporate customers. The major commercial banks like State Bank of India, HDFC Bank, and ICICI Bank contribute significantly to India's financial landscape, supporting economic transactions and a range of services. The commercial banks can further be divided into two different categories, namely the public sector banks and private sector banks. Let us look at the public sector banks. Public sector banks or PSBs are banks where the government holds more than 50% of ownership. These banks are instrumental in implementing public policy objectives such as promoting financial inclusion, offering agricultural and rural credit, and supporting small and medium enterprises. Currently, India has 12 major public sector banks, including the State Bank of India, Punjab National Bank, and Bank of Baroda. These form the backbone of the banking structure because these are run not for profit but for ensuring that the banking services are available to everyone. The next type of commercial banks are private sector banks. Private sector banks, which majority stake is held by private shareholders, are known for their innovation, customer service, and extensive use of technology. They primarily serve urban areas and middle to higher income individuals. HDFC Bank, ICICI Bank, and Axis Bank are prominent examples, each transforming banking through digital solutions and a robust branch network. Then there are cooperative banks. Cooperative banks operate on principles of self help and mutual aid. They are primarily focused on rural areas, supporting agricultural and related activities. There are two main types of cooperative banks: urban cooperative banks and rural cooperative banks. These banks provide saving and credit opportunities to small and medium sized farmers, rural artisans, and entrepreneurs, playing a significant role in rural financial inclusion. Moving ahead, we have the next category of banks, which is known as a regional rural bank. A regional rural bank or RRB were established in 1975 to enhance financial services in rural areas, particularly for small and marginal farmers, agricultural laborers, and small entrepreneurs. Sponsored by major public sector banks, RRBs blend the familiarity of local banks with the stability of larger financial institutions. They are crucial in promoting financial inclusion in the unbanked rural areas. The next category of banks are known as specialized banks. Specialized banks in India, such as Export Import Bank of India, also known as EXIM, Small Industries Development Bank of India, also known as SIDBI, and National Bank for Agriculture and Rural Development, also known as NABARD, focus on specific sectors. EXIM supports export-import activities, SIDBI promotes MSME sector, and NABARD aids agriculture and rural development. These banks are instrumental in providing targeted financial services and policy support to their respective sectors. Then we have the next category of banks, also known as payment banks. Payment banks are a new model conceptualized by RBI to boost financial inclusion. They accept limited deposits, currently capped at 1 lakh rupees per customer, and offer payments and remittance services. Payments bank do not provide loans or credit cards but serve the unbanked by offering basic savings account and payment services. This model primarily targets migrant workers, low income households, and small businesses. The next type of bank is your small finance bank. Small finance bank focuses on providing financial inclusion for underserved sectors, including small businesses, marginal farmers, and entities in unorganized sectors. These banks offer a full range of banking products, but with an emphasis on small scale customers in rural and semi urban areas. The examples include AU Small Finance Bank, Ujjivan Small Finance Bank, both of which have made strides in offering microfinance and small savings option to the customers. Moving ahead, then the next structure is your local area banks. Local area banks were introduced in 1996 to support rural and semi-urban development by offering efficient banking services within limited geographical area, typically covering up to three contiguous districts, which is known as three conjoined districts or three adjoining districts. These banks aim to mobilize rural savings and channel the funds into local economy, supporting small and medium enterprises and farmers. Each of these banks serve a very important role and a unique role in the Indian economic development landscape. Public sector banks support government initiatives, private sector banks drive innovations, and cooperative and regional rural banks serve rural population, and specialized banks cater to specific sectors. This diversity ensures that all segments of the economy have access to financial services. Banks like private payment banks, small finance bank, and regional rural banks are crucial for enhancing financial inclusion. They provide essential banking services to unbanked and underbanked population, enabling economic participation for rural communities, low-income households, and small businesses. Despite their significance, banks in India face challenges such as non-performing asset, regulatory compliances, and competition from non-banking entities. These become important challenges to address for sustaining economic growth of the banks and ensuring that they continue to meet the financial needs of India's diverse population. In conclusion, Indian banking system is diverse, with each type of bank contributing uniquely to economic development. Large commercial banks to niche banks focused on financial inclusion. This system is designed to cater India's vast demographic needs. Understanding the rules and functions of each bank type helps us appreciate how financial system supports the country's economic fabric. Thank you again for joining me in exploring the various types of banks in India. We will meet again.